Hello there. We start today a series of video courses here on top-rated Forex brokers with the beginners part. The aim is to create also intermediate and advanced trading training courses, both from a technical analysis point of view and a fundamental analysis point of view. But we have to start from somewhere, and here we are with explaining what Forex trading is, and moreover, why traders are attracted to Forex trading. Forex trading means that you come to a place where you buy or sell a currency, but currencies are arranged in currency pairs. You can not only buy a currency, you can buy a currency or sell a currency based on the way a currency pair moves and against another currency. For example, this is the Euro USD that you see here listed on the trading platform, and it is under a 4-hour chart. So what does that mean? It means that every candle that you see here, green candles or red candles on the screen, well, they represent 4 hours as a time frame. So if we want to buy the Euro USD, or to sell, for example, let's buy at market price the Euro USD, now trading at 1.19180 to 1.19184. This is the quotation. If you want to buy, you always buy it from the right side. This is called the ask price. You buy from the ask. If you want to sell, you always sell from the left side, from the bid price. When you do that, you can take a trade either based on bullishness. Being bullish on the euro means that you expect the euro to move to the upside, or you can take a trade being bearish on the dollar, namely, you expect the dollar to move to the downside, and hence the Euro-USD pair will move to the upside. When it comes to Forex trading, everything relates to the number of pips that you make. A pip is the difference between the bid and the ask price. For example, now the price is 1.1918. Therefore, if we buy it here at 1.1918 and the market moves to the upside to 1.1980 or 1.20, the difference between the higher price and the entry price, or the exit price and the entry price, represents the profit. Or, if the market moves to the downside, it represents the loss. That's Forex trading, ladies and gentlemen, nothing else. Now imagine how this world functions. Or not how it functions, but how it is organised. Imagine that this is the world. Now, every country that we have here in the world has a currency. We have the USD, or dollar, in the United States. Let's put it here. We have the euro in the Eurozone, and so on. So let's actually put the euro here as well. This will be the euro. We also have the Japanese yen, and so on and so forth, all the currencies in the world. Now, if you combine them 2 by 2, you will have currency pairs. So, this will be the euro and the USD, or the euro and the Japanese yen, or the Japanese yen and the Australian dollar and New Zealand dollar, the New Zealand dollar and the euro and Australian dollar, and so on. You get the picture. When buying and selling a currency pair, it means that effectively you have an opinion about how the economies, the two economies in a currency pair, evolve. Because if you look at the currency pairs and how they are part of the Forex ledger board, the way it moves represents the imbalances between those two economies. The Australian and New Zealand dollar pair, for example, this one shows the weakness and the strength of an economy. As long as the Aussie dollar New Zealand dollar pair moved from 1.06 to 1.014, this can happen only in 2 instances. Either the Australian economy outperformed the New Zealand dollar economy, or The monetary policy in New Zealand is easiest, if you want, or is not that tight like the one in Australia. The differences between the two economies, the differences between the two monetary policies, are seen in a currency and in a currency pair. Traders strive to have a competitive edge, or to have an educated guess about fundamental or about technical parts, in order to interpret how the market will move. That's what makes a successful trader. When it comes to Forex trading or to entering a market, you can enter a market either from a fundamental point of view. There are a lot of macro traders that look at different economic aspects around the world's regions, around the different countries, and so on, and they buy or sell a specific currency pair or a specific currency, like the euro against everything else, or the dollar against everything else. Or you can be a technical trader. If you are a technical trader, then you have any trading platform, like this one, that offers a bunch of technical indicators to use. If you go here to add indicator, you have indicators for everything. You have indicators for the Bill Williams indicators, you have math transform, you have momentum, which are more or less oscillators, you have trend indicators, and so on. Statistical volatility indicators, you name it, everything you need to have from a technical point of view exists in a trading platform today. If it doesn't exist, it can be imported, as long as you have your own indicator or technical approach. There are also trading theories that we will cover in these courses, like the Elliott wave theory, the Gartley theory, the gun theory, and so on. But in the end, what matters is to answer a very simple question, which by its simplicity makes Forex trading so complicated. Is the market, any market, moving to the upside or to the downside? Or will it range? Because if it ranges, you may have some problems. Because if the market ranges and takes its time on the daily chart or on the bigger time frames, and you play a negative swap, you will learn later what a negative swap is, then the balance of your trading account will decrease, which is not something that you actually want. To sum up, Forex trading, or the foreign exchange market, is the biggest financial market in the world. There is no lack of liquidity here. You can sell and buy whatever you want. You will always find someone willing to take the other side of the trade. And every day, over $5 trillion exchange hands. This makes it not an impossible, but a difficult trading environment. This makes it mandatory to understand how the market moves and what are the best approaches to technical analysis. And this is why we've created a trading academy destined to help everyone. We'll start from scratch with explaining various concepts, technical analysis concepts, explaining a trading account, pros and cons of different brokers and trading platforms, and so on. Then we will move slowly but surely into fundamental approaches, into central banking, into basic technical analysis concepts, and then to advanced stuff to see how to trade the Forex market to make a profit. Thank you for being here. Now let's move on.